Hey guys, this is Simon with ToughTrader.com doing the live market preview. Well, actually, I've had the whole day off and I forgot it's not the live market preview. This is going to be recorded, right? Just doing the general coaching session and market preview for the week to come. Happy MLK Day. Hope everyone enjoyed the day off. It was nice to get a third weekend. I might end up with a fourth day. It looks like it's going to ice over here in Dallas tonight, and if that's the case, I'll be working from home and where I have unfortunately less monitors, and we'll just have to make do with that. But we will get the room open, and we will be trading tomorrow morning. So, something I want to address before we get started. First of all, let me pull this up really quick. Not what I wanted. See if I can get this. Oh, and there we go. Hold on one second here. Mm, Got it. Okay. Well, I don't have it here. I will just say it. Past performance is not indicative of future results. This is for educational purposes only. Um, let's see what else is there. You can lose your ass trading futures, guys. Don't know how else to say that. Have a trade plan, have a risk plan. Don't constantly draw down. My number one piece of advice is if you're losing money, even if you're on a roll and you start losing money day after day, stop, right? Stop. Get your house in order so that you know your edge is working. A lot of people are making money long only right now, and that's great. Zero wrong with that, but you do want to switch gears if you start drawing down, because the biggest issue, and this is according to Dr. Steenbarger, right? Steenbab, who's I highly recommend you follow him, right? The biggest issue is the 3 month, the 6 month, and the 2 year boom bust. And a lot of people go through a boom bust process that is devastating. My goal as a trading coach, right, is to help people avoid that. So let's jump into the week. Oh, so what I wanted to share is I'm going to reintroduce. Things have finally settled down enough for me in 2018 that I can reintroduce the active tracking of the trades I point out in the room in real time. I was going to show the NQ, show what this looks like, right? So this is going back to January 1st. This is all the NQ trades going back to 1/8. And I'm going to assume I just took that entire first week off. I did not have any on the stream, and we were just moving straight up. So as you can see, really 1/8 was my first NQ trade that I had on the books for the year. And as you can see, we've had a pretty nice little run. So this spreadsheet, I wanted to explain it. The spreadsheet makes a couple of assumptions. Number one, it assumes that, and as I'm trading more than one contract. The P&L reflects my best exit on the trade. However, that being said, I do exit the trade in a scaling fashion. I do not hold all my trades to max target, right? So anytime you do a spreadsheet, there's all kinds of ways to manipulate it, make it look good, make it look bad, right? So if you want to rework this, maybe you're a one contract trader, maybe you're just a trader that comes out of the trades earlier. The entries are posted on the Twitter stream in real time, members Twitter stream. Let me show you this. I can pull it up. There it is. And it looks like so. So I will pull it down and it'll basically be something like um so it'll look something like this: short NQ 67.5350, stop 67.61 and a quarter. Again, this is the members private stream, scaled 67.48 plus 5. Usually I put how much of the trade I'm covering and then where the stop is going. That's how the kind of the entry exit stop, that's how that process works, right? On each of the trades. And um so if you want to modify the cumulative P&L, what I would just simply do is very simply go back in and say, well, let's say Simon made 5 points on all his trades and he didn't get any of these 21s, 10s. And I would assume the full loss, that 10 point loss, that 7.5 point loss, that is per contract. There's no question. There was no like some of them went out at 3 and some of them went out at 5. Those were the losses on that trade. It's only the scales on the profitable side that are variable. And then realize that everyone in the room, sometimes people don't take the trade that I point out. Some people don't like it. Some people have different scalings and different time frames. So this is as close as I could get to show some relative performance in the room. And there's always the beautiful disclaimer up on top. Again, the goal is not to point out that I'm any kind of guru or I am a good trader. Don't get me wrong. I'm an expert at trading. I'm an expert at following my process. I'm not okay, but I am not the best trader in the world. George Soros is not calling me overnight, and there's always a different skill level between managing one contract and managing 10 contracts and managing 50 or 100 contracts. Right? It's a different set for each. And also, you got to remember that you have to account for what your personality type is and how you would manage the trade when you're rolling along. However, you can see the majority of last week, both short and long, and note that they were about balanced there between the shorts and the longs since the 8th. And at any rate, long story short, it's been a pretty good start to the year. Where I'm currently sitting at about 50 and 3/4 points on NQ. I'll take that all day long. And again, I'm assuming you're trading more than one contract because otherwise your scaling methodology becomes very difficult. So let's move on. I will be posting the spreadsheet daily so people can keep up with the performance in the room. And let's go over and post. Let's go take a look at ES, just kind of figure out what's going on for the week. What I really want to point out here is what is it going to take to get the market to roll down, right? What's that going to look like? Because right now, uh, every every market, every setup, basically, if you look for a long side rotation down, you're making money, right? This is as straight up as it gets. So we have to go buy one piece at a time. So first of all, on your this should be thrown out. This doesn't exist as far as I'm concerned for tomorrow. On ES, it was a half. There was just no volume there. I realized that it opened and it counted the volume that went off in Globex, but there was no volume there. This simply does not count, right? So number one thing that has to happen in order to go down, or in order for us to know when the market's going to roll lower, but this is both true in ES and NQ, and this is where I'm going to focus the talk tonight, right? You have to get underneath your prior day's low, and there's a couple stages that have to go through. So first of all, we have to find the ability to trade back in and underneath 27.87 and a quarter. The blue area, this is what I refer to in the room as the neighborhood, right? Why is the neighborhood important? The neighborhood's important because I know that when I'm above this neighborhood, if you think about the psychology, trading is all about psychology at the end of the day. Even if it's a computer program that's running the trade, there's a human behind it that had to think about the logic and the process going through and how other traders are going to react, right? Let me give you a good example of that. Let's say there's someone out there who knows an event will occur and the market is going to crash, or he believes an event will occur and the market's going to crash, right? Well, first of all, he needs the event, right, in order to make that happen. And then the next thing that he needs is he needs everyone else to believe the event, right? So a great example of that, someone come up to you and say, here's the news. It's horribly bearish. Okay, you've got two pieces, right? So now what do you need? And then you short the market. What do you need in order to make that trade work? Well, you need someone else to come along and go, yeah, I agree with you. I want out of my position. Why? Because you've got to drive the price lower than where you entered it in order to profit, right? So the neighborhood's important because barring significant news, I expect this neighborhood, this is where everyone invested emotional time, psychological and emotional capital into getting long. And as of right now, on the after hours, we're trading 27.94.50. As of right now, all these people are very, very happy. Where do these people become unhappy? They become unhappy once we trade below and hold below approximately 27.79 and 3/4. That's where all these people become trapped. Okay. And then because those people are trapped, I'm just going to go through this really slowly so people get it. Trapped people, right? They feel comfortable right now. I was a genius. I bought at 27.84. If we start trading at 27.76, they might go, I wasn't such a genius, and maybe I want the weakest hands will offer out their contracts. Remember, right, that no one when you take a look, right, before you get too bearish on the market, when you take a look, right, imagine just hypothetically we went from 27.94 to 27.10. Remember, even at 27.10, the only people that are losing money at that point are the people that bought this year, right? No one from last year is underwater who's long. It's going to be very hard to get the market to accelerate down until you get underneath some of these guys and they start forcing this downward pressure. And I would even argue one day is not enough, right? So when I'm teaching volume profile and market profile, the thing I like about market profile that makes it really easy is I can go like this: neighborhood of support, neighborhood of support, neighborhood of support. Everyone gets that. It's really easy to understand that these are the areas where you're going to find responsive buying in general, right? There, notice that I didn't give a specific area. I just said, hey, just this area, and this area. These three broad areas are going to provide areas of support. Okay. In order to get short, right? I'm being very consistent here. We got to get below 27.79. I expect us to start running into an area where we'll find responsive buyers at 27.65 to 27.56. That means I expect people to come in, make an attempt to push up. And then if that fails, I still expect them to respond in the 27.49 to 27.43, specifically 27.50, 27.48 area. I expect responsive buyers. Why? Well, first of all, that's over a 50-point push to the downside. It's highly unlikely that we get that in one day. Realistically, 15 to 20 points down is going to find responsive buyers. In a worst case scenario, 30 points. That puts me at 27.64 neighborhood. That makes this area right here prime time for responsive buyers and a push back up. Again, in this environment, what the most likely scenario is that we have one nasty down day and then we just resume the trend or we go into balance from there. It's unlikely that markets just generally don't make a top and turn around and go straight down. Tops take time to form. So I expect responsive buying out of all of this. So hopefully everyone understood that and it was clear, right? That would certainly be the objective. Let's go look at NQ, although the chart pretty much looks identical. So there's the NASDAQ 100. Chart looks a little different there. Let's erase some of this and go through it really quickly. So this is your neighborhood right here. We don't get below 67.45, there's no short. Of importance, the chart needs to be repaired, and so there's incentive to get down uh, to this area down here, this 67.23. Now this is important. The TPO and the volume point of control were pretty spread out here. The support area for this chart is actually down in this area down here near the 66.80 area, and that makes sense if you think about it. Um, this area has already been tested. This is the second distribution. Second distributions on a TPO tend to provide excellent support. The danger is if we get below 66.60 and then we get below 67.23. So I think we're all right all the way down to 67.23. You can find responsive buyers. If we get stuck, excuse me just one second, please. Guys, I apologize about that. The home front had to be taken care of. So my point behind all this is this area has already been tested here. Looking at NQ and has been auctioned over, right? So that makes this location down here really prime. I'm not sure we can get there in one day from 67.82 back to 66.82, but I do know I want to be a responsive buyer in here when we get into this area. I expect responsive buying, even if we get underneath this through this entire area. I expect them to attempt to hold it back up. First of all, 67.82 down to 67.23 is a big fat rotation. The biggest concern here is that we just get one day where it all goes foobar. We just get we get that huge push to the downside, and it really, really kills us. Now, I want to show you one thing where I had my one stop. I want to go back to my spreadsheet for a second here because this is important. Last week, I talk about process a lot, and the one stop that I had that was nasty was this 10 pointer right here on the 11th. Okay, I made an error. I made an error on this chart, on this trade. My plan was to skip the first hour of the day. I'm going to go to the chart really quick. Okay. It was on the 12th. It was on the 11th. It was on the 10th. Correct it. Let me go back and look really quick to make sure I have it. I don't want to speak out properly. It was the 11th. Okay. And so what happened on this trade? Here we are. These are all VWAPs and variations on VWAP. So what happened was, this is a 24-hour chart. That's why it looks funny. Let's fix that. There we go. Now we'll have a proper chart as soon as this gets built. I was wondering, scratching my head, going, something's wrong here. Okay, here we are. And if we go back to the 11th. Okay, so the pattern has been, I want to show everyone how I totally screwed this up. Why? You learn the most from your bad trades. So the pattern has been, once we've gotten above our, on almost every day, once we've gotten above our largest last seller, which was this bar right here, you can see we've pushed out almost every single day. If you go through that the whole week again, when we came down, when we finally got above the last seller, we did make a rotation back down, but then we finally, almost every single day, we've pushed to new highs once we've gotten above the best last seller. Well, if you go to that 11th in the 11th in the first hour, what happened here? And I'm going to spread this out so everyone can see it. Sometimes it's difficult with all the VWAPs stuck in there. So what you will see here is that this was my best last seller, and we got above, and I lost count of where we were in the process. This was within the first half hour. We closed above, and I took a long. My long is right here at the 66.88 level. When we pushed in, I got long, and I obviously got stopped. I forget exactly where my precise entry was, but the stop was for 10 points. I know that. And I got stopped out back here. And so this had an important lesson to it. And I want to cover this. First of all, I got really pissed that I got stopped. I try to control my emotions most of the time when I'm trading. It was really, really agitating to have that stop. That is the only time in the past 3 weeks that that pattern is broken. And I lost my cool. There's no other way to put it. I lost my cool. So luckily, one of the guys that I coach one-on-one, Alex, did a fantastic job and came back and said, "Hey, Simon, following your process, you got to get long back into this candle right over here, back into this test back over here." And we did. This is the next trade. And so I want to show you why this is important from a following process standpoint. Okay. So I went on tilt a little bit here because I got pissed, but my tilt is a little bit different. I know when I'm mad that I'm likely to overtrade. That was old, at least old version of me. The new version of me is, hey, I'm mad. I need to be I need to be careful of not clicking and drawing down money. And really, Alex came back and said, Simon, this is not what you coach. It's not what you coached me up to do. Follow process. So I cleared my head. I followed process. And I want to show on paper why that was important. Because had I not followed process after this long, you'll notice that on the same day, the next two trades, one was for P&L of 10 points, the next one was for P&L of 11 points, right? I was ready to walk out on this loss. I was so agitated. And so the reason I was able to get back to making money so quickly and able to salvage my day, okay, and you'll notice that the P&L on a per contract basis is huge here, right? If I just walk out with this loss here right now, I'm sitting at well, I would be sitting a little bit higher. I'd be sitting about 585 versus $1,015 per contract on the year. It would have a big difference, right? So why were we able, as both as a group, as a team in the room, and myself as an individual, why was I able to get back on track? Because I got emotionally upset. I was able to recognize that when I get emotionally upset, I know that I tend to overtrade, right? And I knew that the long was the right side of the trade. We had not broken down. We were not underneath significant pressure, and we hadn't stretched up enough to justify really fighting for the short side of the trade. Okay, great. All of that is put into a picture. Okay. But because I was able to get quickly back on process, had I taken a second stop here, I still would have been profitable on the week, the month, and the year, right? But my day would have been done. 2 stops back to back. That counts my maximum stop loss for the day. But the whole point of that stop loss that a lot of people don't get in the room is that when I take that trade, if um, the whole point of that 2 stops back to back is that it almost never happens. Usually my second trade, even if I take a stop, it's very rare where I get hit and hit again on my next trade. My entries are pretty solid, right? So the whole point is even if I get pissed off, I need a way to quickly get back to the route which will let me make money, right? So when I come back to that route that lets me make money, the um, the important thing is that I actually have a set of processes that I follow, and that process requires me almost constantly when I identify where my best last seller is. It's not always the lowest bar. In this case, it was not always the lowest bar, but once I get above that best last seller, I need to jump on that train and I need to be long, right? So there's multiple processes going on. But when I'm starting off the day each day and looking forward to the week. So I'm going back to TPO here, right? And I know coming into this week, right, my mistake was made over here. And I wanted to talk about this because the first thing that you'll notice, just like I'm saying, look, guys, we've got to get below this area, the 67.45, to have any chance of rolling to the downside significantly. We've got to get below 67.45. That's pretty much where the hounds will be released, right? Potentially. If you look here on this day, even though I took a stop, this is the same day I took a stop. It's a little bit different picture. It's a 30-minute block. It was this bar right here that got me stopped, right? But if you look, where was my neighborhood? Back to the left. It was all through here. And I knew that unless we were underneath there, underneath this neighborhood, that we were very likely to push out and push up, right? So I put those two pieces together. I put that, even though I understood that we had responsive buyers, I got a nasty stop. I made a trading error by taking a trade in the first 30 minutes. Usually I let that first half hour go, but I had a process to step right back to that let me make my money back and end up with a very profitable day, right? So all those elements come into play at one time. So where am I looking to improve for next week? First of all, I want to be very cognizant of not taking a trade in the first half hour. Why? I don't want to get run over, and it's not that I can't figure out what the trade is right or wrong in the first half hour. I just tend to have a much higher win rate really after the first hour of the day. Pretty straightforward, pretty simple, right? It's not that you can't make money in the first hour. How much do you have to invest? How hard is it with the whips? What's your risk of getting caught? And at the end of the day, avoid going on tilt, right? And avoid boom bust processes. Well, all of that is easier for me to do outside of the first hour than it is inside of the first hour. So that's why I've pushed to outside of the first hour most of the time. The exception of that is June, July, and August when it's really slow. You've got to take your trades in the first hour in that particular case. Okay, so looking at Tuesday, we've got to get below 67.45, right? This 66.80, I believe we will find responsive buyers from this neighborhood. If things get really, really sloppy for some reason, 66.58 at the latest to 66.70, I would say. This whole area is just prime to get set up for a slingshot back to the upside. And again, I'm not worried about the market falling apart. I do think we'll come in because it's option expiration on Friday. I do think we'll come in over the next 4 days, but what we're likely to see is the price action look like this. Instead of coming straight down like this, we're probably going to get days where it looks like this. If we come back and look, here, let me place all the lines. We'll get some play on a variation that looks like, where's the last consolidation? Like this right here. See how we came down? We started to move lower and we eventually rotated down through here. This is going back into December. We pushed up pretty smartly. And then we went through this series where we did rotate back down. We did back and fill again, right? But it was just a slow grind down um, from day to day until finally, actually, what marked, and this is pretty important, what marked the low was when the volatility got highest. That was the final shakeout. That was on 12/29, and then we launched into this other move. I would not forget this process that we followed here, and my guess is the downside rotation looks like this. Um, if we get something different, we'll know it, right? It'll be gap down, open drive lower, inability to fill the gap, no half gap, inability to get above the last 5 and 15-minute bars. Like you'll see it, right? Expansion in range and expansion in rotation size overnight. And so that's ES and NQ. So let's talk about the last piece that's important here. And I know I've been a little bit, I think 3 days of vacation have made my brain a little mushy. But let's talk about the piece that's most important here that I want to stress, and that is um, how do you pull money out of the market on a daily basis, right? Now, I've coached all kinds of people. I've coached guys that almost everyone I coach on a one-on-one basis comes in as a boom bust trader, right? And what's the deal that everyone's leaning on? First of all, you'll notice I use almost no technical indicators, no oscillators. And why is that? It's not that they don't work, it's that they don't work all the time and they create an emotional crutch. There's very few people I know with a discipline to look at an indicator and go, it's not working now, but then they can tell when it is working, right? So I tend to gravitate towards things that stay the same regardless of what the market is doing. So I know value area highs, value area lows, points of control, neighborhoods, basically to simplify it, right? I know what rotation sizes look like, and I know what it looks like when we panic and get on the edges of a market, and then we get above or below our best group of buyers and best group of sellers, right? And generally, right, if I can get people to get outside of the first hour and take their 1 or 2 trades a day and focus on increasing their trade size as their trades move along, I can get them to get profitable, right? Not overnight. It's not an instamatic, boom, this is easy. The first step is you get them to stop losing money. I'm talking to any of y'all out there, right? Stop losing money, number one. Number two, have a written process. What do you want your entry, exits, and stops to be? And have a checklist you can go down. It doesn't mean you'll be perfect when you trade, but it does mean that you'll stop getting run over as the um, it does mean um, it does mean that you will stop drawing down hard and you'll get out of the places where you're getting run over and instead be able to switch gears and get to the places where you have the best odds of putting down some positive P&L, right? And you can work on building your equity. As you build your equity, you can then build your trade size, right? Versus going, I'm going to go where the most action is, where it's hardest, where it's fastest, which is almost always in the first half hour and the last half hour of the day. And that's where you see traders get torn up prior to building expertise in those time frames. And it does require an expertise. So, anyways, my name is Simon. I'm with toughtrader.com and Trade and Perform Coaching. If you'd like to join us in the room for a couple of days, you can simply send me a email at trade and perform, TRADEN PERFORM at gmail.com. And I'm more than happy to have you. Thank you for taking the time to watch the video. I really appreciate it. Make money, guys. Really possible to do it, right? But you can't chase it. You've got to have a plan to capture it. It's a better way to put it. And anyone can learn to trade. Most people will just be looking for action. The few will be looking for consistent profitability and increasing their trade size over time. That's how you kill it over the long term. Anyways, have a great night, guys. I will see everyone tomorrow morning.